Welcome to the Real Estate Investing Podcast, where we help you unlock your potential freedom through land investing, real estate investing, and entrepreneurship. Hey everyone, this is episode 124 of the Real Estate Investing Podcast, discussing top questions land flippers are asking in 2023. I'm your host, Dan Apke, joined again by my brother and business partner, Ron Apke. Before we get into the show, let's go over a question from one of our featured members in our Discord community. Today's question is from Tamir. Tamir asked, has anyone experienced locking in a seller and then once closing starts, they seem to be unresponsive and hard to get a hold of? Do you hold off on getting a title search done or do you move forward with it? Really good question here, Ron.
So it sounded like the first part of that question, it'll sound like he might have already been in title. Is that correct? Does that sound right or no?
Has anyone experienced locking in a seller and then once closing starts, they seem, so yes, it is in title.
If it wasn't in title, I'm not going to just send a title without like confirming with them and giving them an update and having some kind of communication. I don't want to send something in title and have title do work if I can't get a hold of the person, have closing scheduled. If it's already in title, then like just have it keep on going and hopefully they respond or whatever. It happens. It doesn't happen more times than not. The seller is not ignoring you. They're just whatever. They're just not at their phone when you're calling. Try to call at different times of the day. That's what I try to call late at night, not late at night, but 7 p.m., something like that, their time. Try to call in the morning and you'll probably get them eventually. You just got to keep calling, honestly, Dan. A lot of times they're not ignoring. They just don't recognize the phone number, or maybe it's automatically getting sent to voicemail, something like that. But yeah, that's kind of the situation. But if it's not in title already, I would wait to get a hold of them personally.
Yeah. If it's it's rare that we lose buyers or lose sellers in title, Ron, right?
Yeah, without a doubt. Like if you drag your feet for a month, 2 months, 6 weeks, that's why we're so big on closing things quickly. That's why we don't like wholesaling a lot of it, because we can close so fast with them and there's so little time for them to fall off. And we're doing such a big service to them by getting them money in 2 weeks. But yeah, we rarely use it. And it's a tracked KPI for us is sellers backing out for whatever reason.
I completely agree. Well, other than that, Ron, let's get into the show. Today's topic is top questions land flippers are asking in 2023. But before we get into that, if you guys would please leave us a review on Apple Podcast, it really helps drive our mission and business forward. So please leave us a review. Ron and I see those. We really appreciate it. Other than that, Ron, the top questions land flippers are asking. We have webinars every Wednesday at 6 p.m. Eastern time, Ron, and that happened to be last night when we were recording this. And we see a lot of these questions over and over again. And we also see the questions kind of evolving as they go, right? So in 2021, people weren't really asking about a recession. People were asking about COVID, right? These questions evolve. As interest goes up, people are asking about high interest rates. As interest goes down, people are asking about cash versus owner fund. You know what I mean? Like it's so correlated to what's going on in the market. And that's why we want to have these every once in a while for you guys. We're at the beginning of 2023. We want to provide you with the updates. Usually what people are asking, Ron, are the hot topics in the land community. So we want to address these here.
Yeah. And it's, there's like never, I don't want to say there's never like a time where you're not going to question something. I guess at the end of the day, if that's kind of your mindset is like, whether it's a recession or there's too much competition because the market's hot, there's always something and there's always a reason not to invest. There's always a reason not to get involved.
That's what it was, Ron.
What?
I bet if you go back to one of our earlier podcasts, it's how do we acquire properties in such a hot market?
Exactly.
People used to ask that a ton.
Mm-hmm. There's always opportunity. That's kind of the point I wanted to get at. There's always opportunity no matter what the market is, hot, cold. There's opportunity in some side of the market. So let's get into it, Dana. What's the first one we got?
How is the recession affecting the land flipping business? That's the top question. Number one question we get asked.
Yeah, it's definitely, and this is rephrased, I guess, paraphrase, I guess, a little bit. People asking, are there still buyers out there? Is this a good time to get into land flipping? Kind of similar questions like that. And how is the recession affecting it? There are less buyers out there. I want to be 100% transparent and honest with you, but there are buyers. If you're in the right markets, if you're priced correctly, the number one thing about doing this business in a recession is pricing things to sell. You cannot price things to compete with other properties on the market if you're in a slower market or if it's a market that's being heavily affected by the recession. You need to price things to sell and things will sell. And that means on the front end, and here's the opportunity part, there are more sellers out there looking to sell land to you because they're scared, they're fearful, whatever it is. And you can, if you're running your business correctly on that end, you should be getting properties for cheaper and then selling for cheaper on the back end. And it always is going to balance itself out. The opportunity right now is on the acquisition side, Daniel, because there are people who need cash for one, and there's also people who are fearful that their land is going to be worth less in 6 months.
Yeah, and on the for sale side, you might have to put a little more emphasis or be willing to drop the price a little more or give some more better terms to, in 2021, Ron, 2020, beginning of 2022, and usually actually pretty much throughout all 2022, like the market was so hot, we were getting cash with very little contingencies. Maybe now we're going to have to adapt a little bit and give a little more contingencies. There's less buyers, maybe adapt. It's becoming a buyer's market. And in a buyer's market, you have to adapt to the buyer a little bit, Ron.
Yep. Spend more money on marketing, which is like you want to showcase your land. If there's only when in early 2022, late 2021, maybe 1,000 people are seeing your property a day. Now it might be 150 and you need to be showing that property correctly. I'm talking about just online, whatever it is. You need to be making sure you're showing your property correctly. You need to make sure you're getting on all the important sites, getting it in front of as many eyes as possible. Maybe you're putting signs on your property or having someone put signs on your property. There's so much opportunity there. Yeah, I just think you got to focus on that sales side a lot right now.
And at the end of the day, the acquisitions are going to come easier. Like the opportunity is in the acquisitions, but the focus is on the sales. I'd say the opportunities in the acquisitions, more people need money. Interest rates are higher. Cash is more valuable. So they get a $90,000 cash offer. That's more appealing to a cash offer 2 years ago when everyone was offering cash. There's just so many things that have changed in the uh, with the recession, Ron, and with it going, and we're, Ron, only at the beginning of the recession. Like we're just getting into it. And I think I shared an article on my Instagram the other day that showed like 60 something percent of Wall Street experts and Wall Street experts predict a recession coming, which is higher than it's been in a long time. The only time it was higher than that, Ron, was in 2020 or 2019 when COVID was first hitting. Everyone thought we were going to go into a bad slump, and then they ended up just printing money and kind of delaying it. And that's what we're going to see now start to affect. The time before that, when it hit above 50%, was I think 2006 or 7. So the predictors are looking like it will be, but guys, this isn't a recession's not 3-4 month type of thing. This is going to be going on for 12, 18, 24. Who knows? We can't predict that, but this is something we just have to adapt to. Our business is still going to be extremely profitable with adapting to it, Ron. Let's get into.
I almost fell on my chair there, Dan.
Oh, did you? I didn't see that.
That thing's down. Real fast, Dan, let me add something. That because you're talking about the recession not being like it's going to be 18 months, 24 months, whatever it is. The thing about our business that is so appealing for a recession is the speed of everything we do. We're making an offer one day and then we're purchasing it 2, 3, 4 weeks later, whatever it is, and then selling it right away. The market is not going to shift 40% in 6 weeks. So that's why I'm telling you guys, try to focus on selling your properties fast because like your offer price week 1 versus what the property is going to be selling for week 6 is not going to be drastic, maybe 5% maximum. Like that is a huge drop off if the value of your property drops 5% in 6 weeks. So you don't want to be holding property right now for 12 months because the value is probably going to be going down. But if you're doing things how we teach it, fast, quick flips, you're going to be fine because your data is so recent.
Yeah, and another thing to mention too, since we're on the recession topic, Ron, is different markets are going to be affected differently. These growing
Exactly.
areas are not going to be affected like some of the lower areas that aren't really growing, Ron, or the dying areas like the Californias of the world. So every market is going to be different. I saw a chart on the Wall Street Journal the other day too that showed where is money going? Where are people dumping money into right now? And it showed on the chart the different states that money was getting dumped into. And then it also showed where money was leaving. And it was interesting to see that and correlate it. Like that just shows the state by state economics, what's driving it. Like Florida, Texas, there's some random hot ones too. I think like Minnesota, they're like $15 billion has been dumped in there from just people moving or putting their investments there. So each state and area kind of has its own economy in a sense too, and then the United States is kind of the macro, and the micro is more in the actual
Yep.
areas. So I did want to point that out as well, Ron. But let's get into the other question that we get asked, Ron, more about sustainability. Sustainability. Where do you see the future of the land business going?
We talked about it last episode, guys, and the future, in my opinion, and I'm sure Daniel probably agrees on some point of it, is data. Like data is going to drive decision making in the land business. I don't know exactly what that data is going to tell us, what that data is going to drive it to, whether it's cold calling, whether it's bigger properties, whether whatever. There's a future in flipping land with direct mail. I know that without a doubt. But data, I think as a whole, data being more involved in land at a more advanced level, I guess, than kind of the elementary level that it's in right now, I think is definitely going to be a huge part of the future with land in general.
Yeah, I completely agree. And kind of taking a step back from that, Ron, I think just because we get asked this, and I feel like people want to know, like, is land flipping going to be here? The sustainability, like, is it going to be here in 5 years, 3 years, 10 years, Ron? So I want to address that a little bit, but Ron and I wouldn't be building our company out. We have an actual land investment firm, Apkey Land, that we're building out. We're hiring, we're scaling it, we're buying systems, we're investing in employees, all kinds of things. And we wouldn't be doing that if we didn't think it was going to be here in 30 years. Like, our goal is to continue to build that. We are going to continue to build that. So I wanted to kind of touch on that a little bit, Ron, because at the end of the day, sending mail, sending blind offers, texting, calling, whatever your method of acquisition is, there's going to be a way to acquire under market value land. I don't care how you're doing it. The method, what we do is buy under market value land, close quick with cash, and resell it for more. Or you could do other things like owner financing in tight markets, in recessions, Ron, and different things. But the whole premise is buying under market land and then marketing it and coming up with a profit somehow, whether you're leasing it or selling it or owner financing, Ron. But that's going to stay. That is not going anywhere.
Yeah, and I think like people ask like with this question, what we teach, like the number one thing I want to help you guys with who are listening, our students, whatever it is, with is two things. One, how to buy under market value real estate, land obviously included, but these strategies can be used for other types of real estate as well. And two is just teaching land in general. There are so few people in the country who are educated on how to evaluate land, how to comp land. It is such a valuable tool. And those are the two things like apart from everything else we teach and do, like those are two things that are going to be around forever. Buying under market value real estate, land is the main thing, obviously. And then also teaching land, teaching about comping land, teaching about the different niches in land. All that stuff is just in the future, in my mind, Daniel, if those two main points.
Yeah, and if things got diluted, if millions of people joined other land investors and started sending out just blind offers all over the country, it could get a little diluted in 10, 20 years. It's not there yet. We're at such infant stages. I don't think it will get there anytime soon. This is the best time to start, in my opinion, because there's so much knowledge. Like, that's the thing, Ron. You could have started a year ago, but there's less knowledge a year or two ago than today. So you can have an easier path today. It's still not overly competitive at all. So that's kind of what I wanted to
Not even
touch on
close.
too, Ron. Like, and then you get into specializations, Ron. If things did get maybe, so let's take state Tennessee, for example. Tennessee did get a little diluted because we were teaching things in Tennessee and people saw other good deals in Tennessee. Tennessee was a hot market. Everyone's moving to Nashville and these areas and it's blowing up. So a lot of people started to invest there and flip land there. And then they see the postings on our sites, on other people's sites, and they start sending mail there. And it got a little bit diluted at a time. Still, people were acquiring a lot of land. And even better, the people who specialized in certain markets they were on, who were, maybe they were texting, cold calling, uh, mailing blind offers to, they knew the market so well. They're doing subdivisions, minor improvements, all the niches we talked about in a few episodes ago, Ron. They're doing those things. Those people are still there. Those people they were there before it got hot. They're there after it got hot, and they still made more money during both times. So I did want to
Mm-hmm.
touch on the sustainability of things going in different niches and specializations, Ron. The next topic we have is, what are some realistic expectations in the first 12 months of land flipping? And that's a question we get asked all the time because they're pretty much brand new, just starting out. And they want to know, what will my life look like in 2020, in January
Yeah.
2024?
Yeah. I mean, it's so common of a question and it's so that output of what happens in 2023, the next 12 months, whatever it is so based on what you put into it. Like I can't say, I know what's possible in land. Like you could easily make $800,000 in land in the next 12 months. And you could also try it for 2 weeks and then quit and make $0 or lose money in land investing. But what I find is the people who are, without a doubt, the people who are consistent for 2, 3, 4, 5 months, they're making money. They got over those initial humps, the initial learning pains and all of that. And now they're cruising along, Daniel, getting deal after deal. So, I mean, the ceiling, I'm not going to say a ceiling, but I know if you're consistent in this business, sending 3, 4, 5,000 mailers a month for the next 12 months, there's no, I don't see you making under $200,000 if you're doing anything the way we kind of teach things.
And you don't need a lot of mailers to.
That's a low. Yeah. Yeah. That's a
Yeah,
low
you
number, I
don't need
think.
a lot to go in your favor to make that either. Like that's just staying consistent at a consistent 3, 4,000 mailers a month. You're going to make that fair much quicker, probably even at that run than the 6 months. I think realistically, like it is what you put into it. And we always preach consistency and education, consistency and continuous learning. The people who do well are in our calls. They're commenting on our stuff. They're in our Q&As asking questions. They're having us look at their properties and saying, why is it not selling? Whatever that is, like those people are there. They're showing up. Show up. Like if you're showing up and you're consistently showing up and consistently sending out mail, there is no chance you're not going to make that kind of money. There's just 0% chance. I have never seen it happen. The
Yeah.
people, like Ron said, who fall off, the people, they get their little dopamine spike, they see the money, and then they have to go back to work or whatever they're doing, and they get all out of the whack again and they drop right back down and they never do it again. Like those people, that's the thing, Ron. People ask what our success rate is. It's 100% from people who actually stay consistent and do it. I can't, it's hard to tell who's going to stay consistent until 6 months from now. Like everyone says they're going to be consistent. Everyone says they're going to be the best student, but who's actually going to be here in 6 months? Who's going to be here in 12 months doing the same exact thing they do today? They're doing today when they're all excited in 6, 12 months. And that's the biggest thing we see, Ron.
Yeah, it's cool seeing the consistency pay off for so many of these people who are in those Wednesday calls every week, who are in our Friday calls, in our Monday calls every single week, like clockwork. They are in those calls, asking questions, trying to learn, because there's always something else you can learn. You cannot think you know this business in 3 months. You cannot think you know this business fully in 6 months. If you keep on educating yourself, you're going to grow. You're going to learn how to attack bigger deals. You're going to learn how to make $100,000 on a single deal, opposed to just doing 7, 8, 10, $20,000 deals, which is still great. But yeah, those people who are consistent, I really try to, when I'm talking to people about this business, I try to, this is how I sell the business. I tell them it's about consistency. It's not about sending mail your first 2 weeks. It's about sending mail consistently your first 6 months, and almost trying to avoid that dopamine spike, Dan, because I don't want people in this business who don't have a future because they're going to go for 2 weeks, 3 weeks and quit.
Yeah, and it's okay to get excited and send it out. Like that's what we did when we first started, but the difference is we kept that
Yeah.
momentum going. Even if we didn't have that dopamine spike anymore and we were like overwhelmed with the calls coming in and we knew we still had to send out 5,000 mailers by the end of the week and we really didn't want to, we still made sure to send out 5,000 mailers, even if we were dreading it and tired and sick of the business at the time or had other things going on. That's the thing. You gotta push through it. You got to keep your mind on the future, on your vision, on your mission, whatever that is. You want to pay off your debt. You want to move to Hawaii. You want to retire your mom, whatever that goal is of yours. Like you have to keep that in front of you because it's not going to be all fun and dandy at the end of the day, Ron. It's going to be hard. There's going to be obstacles that come up. And just going back to that consistency, Ron, like as soon as you think you know it all, you're screwed. Like that's the thing. No matter what your level is, whether you're Tom Brady of the world or just starting out, like I guarantee you Tom Brady does not have that mindset like he knows it all. Like I guarantee you he's finding out ways to learn or figuring out ways to learn every single day. And that's why he's so successful. And that just comes back to the wisdom aspect, Ron, that continued education. You have to be seeking to get better, to learn.
Yep. And I think it's like in life in general, like it's not that hard to become like a little above average, to become good at something. But that good, like to become from a beginner to being good at something, it's not that much commitment, but to become good to great to the best, like that is unbelievable commitment and consistency. And like you said with Tom Brady, like there's no way he's been in the league for 23 years. Like there's no way he just quit learning after year 5, winning a couple Super Bowls, whatever it was. Like that going to be from good to great. You can be good in this business, make $150,000 a year, but going from 150 to a million, like you need to commit yourself on a weekly basis.
And did you read that book recently by Jim Collins, Good to Great?
No.
It reminded me of it when you said going from good to great. I thought you were about to promote his book or something, but that's a book that talks about, oh, how you're a good company, you have a bunch of employees, whatever you're doing, it's working, but how do you become a great company? How do you become a Tom Brady? How do you get to that next level of greatness? I don't have too much to add on this topic, Ron.
No, I really like that that finish. That's good, and it's like it's consistent. These are all the topics that we're getting asked every week. The consultations. That's what these questions are in these consultations, which I completely understand them. But hopefully that answered a lot of your guys' questions because I know it's probably a common question among our listeners as well.
Exactly. And Ron, to keep these podcasts free and to keep them high value, we'd really appreciate it if you guys could please leave us a review on Apple Podcasts. It really helps us grow our mission and succeed and grow our whole value system, Ron. We really appreciate it. Thanks for joining, and we'll see you guys next episode.
Thanks, guys.